Welcome to Just Some Guy Trading with 2021 World Champion Trader Kevin McCormick. Welcome back to Just Some Guy Trading. I'm Kevin McCormick, and after taking a week off for vacation, this is my weekly outlook for August 6th. We're going to start off with an update on the stock market and what has occurred over the last 2 weeks, hitting on the S&P 500, followed by a look at the 30-year bond. And then this week, we have a crop report coming out Monday that will be very important. And I think it's a good time for us to possibly looking at going long corn. This presentation is for educational purposes only. Before we jump into the charts, I just wanted to recap what we've been discussing for over a month now since I did my July stock market outlook for the second half. During that, I called that July 26th was going to be perfectly 195 days since we had the top and bottom that was hit in October, and that we should be looking for and taking short signals around this time in the market. When we jump into the charts here in a minute, you're going to see that this worked almost perfectly. That's why I like to highlight these things, because it doesn't make sense that these things work, but when you're doing this as long as I have and looking at the data, it just happens. You never know why, but these dates, these symmetrical things, cycles do work. So with that said, let's jump into the chart of the S&P 500. Okay, today we're going to start off by taking a look at the S&P 500 daily chart. As we've been highlighting, we know we had some DeMARK sell signals that have been occurring. They didn't hit perfectly, but what did hit perfectly, as I just discussed, here is July 26th when we hit 195 trading days. And the next day, we had a huge outside day bar and the market went down. As I've told everyone, I'd already closed out 80% of my long position in the S&P 500, and I had a sell order right around here, and that's where I also reversed and went short, and I am currently short the S&P 500 since July 27th. So where do we think things are going to go from here? I'm not expecting, as I said, a big downturn in the market. I believe we have started the next bull market, and this is going to be a nice, healthy, small correction. Our first short target would be right around here based on DeMark's propulsion indicator, which is 4,434 in the futures market. But I think we'll probably hit this and maybe bounce off of this and then make another leg lower. Right now, I don't think it's unreasonable to think that we could have a 10% decline, but I don't think it's going to be that big. I think we're going to be in the 5 to 8% range, which conveniently takes us back into this resistance area. If you go back to my videos for the last couple months, when we were moving higher, I highlighted this as the area of true resistance. And once we cleared this, the market would take off, and it did. So past resistance is going to be our new support level. I think this is the likely area around 4,300 where this correction will end. But on here I've highlighted as well, a full 10% correction puts us down here around 4,136 based on the S&P 500 futures. We also have another area of resistance here from this sell 9 indicator that we got. So those are the areas I'm going to be watching as we go into August and September, which are seasonally poor months for the stock market. But as I mentioned, I think this is going to be a quick, short correction, and then we're going to make a move higher. Last thing I want to do is take a look at the weekly chart here, because we did get a 9 sell signal perfected 3 weeks ago, and this is still in place. So I'd look for us to get down below this level here as well, and that's 4,400. And then conveniently enough, we have a level of support here at 41.59. So kind of like I'm saying, really, I have multiple indicators. I'm not going to get into everything, but I'm thinking 4,400 to 4,300 is where the market could be going over the next month. And we should be looking for and taking sell signals in the market. Don't expect this to be a continuous just drive down lower. We have important reports coming out this week, including the CPI and PPI. That's going to move the market, and that could give us a chance to go short again in this market. So with that said, let's jump in to the 30-year bond and where I think that could be headed next. Okay, the 30-year bond has been on a very heavy decline. We're going to jump into the chart here with the DeMARK indicators in a minute, but also I want to highlight that one of the reasons why I think we could be seeing a bounce in the 30-year bond is because the hedge fund community has become an extremely heavy short position. It's going to right near their longest short position in the last 12 months. And as I've mentioned before, when they get this long or short in the market, they're usually wrong and it's time for them to start covering. That's one of the reasons why I think the bond could be bouncing this week. The other is we're right in this area of past resistance. We had a 13 buy signal sequential a couple days ago that didn't react instantly to that, but as I've mentioned before, we look for a reaction in up to 12 days. And conveniently enough, we're on a 7 buy signal set up right now as well. I think this week we could continue drifting lower for a couple days. We're going to get that 9 buy signal probably just before the CPI and PPI reports come out later this week. And those reports, I'm expecting that we're going to see a continued decline in inflation, and that's going to cause the stock market to have a short-term rally, and we're going to see a rally in the 30-year bonds as well. If we take a look at this on the weekly chart, in addition, you're going to see what I'm talking about here as well. We had a 13 buyback here that we haven't had the market react to, but you can see in the past, when we came down here, we hit these on a weekly basis, and then this last one here was a good buy signal. But as I mentioned before, this is also areas of resistance because this is where rates peaked back in October. And I don't see the rates getting much higher than they did last October, especially when we get positive inflation reports later this week. That's going to make it more likely that the Fed will stop raising rates for the rest of this year. So that's my plan this week for the 30-year bond. I'm planning on going long, probably just ahead of that CPI, PPI report. You take a look at the chart yourselves and decide how you'd like to trade this. Now, let's go jump into the chart for corn. All right, we're going to start off by taking a look at the COT report on corn. As I've mentioned in the past, ever since the war in Ukraine has started, we've been in a tight trading range in corn. And we got up into the upper band and hit close to it again, last week. And then this week, we went back down again, and we're getting back towards the bottom of this range. One of the reasons why I'm bullish on corn this week. The other important piece is there's a crop report coming out Monday that will drive the grain markets. I'm not interested in getting long ahead of that report, but I want to see that report and see how the market responds to it. Because the condition of the crops in the fields could be very bearish for corn or very bullish, and I will be taking my fundamental decision in addition to the technicals after seeing that report on Monday. But I think we could move just a little bit lower here, and then, as we've seen in the past, the commercials, the producers and users of corn, will continue to come in and buy at these levels. They've been doing it for almost 2 years now. They come in and buy once we get down around 475 in corn. I expect them to return again. If we finish up by taking a quick look at the daily chart, it's not what I love to see when I'm trying to go long something, because you can see we're definitely been in a downtrend, but the moving average has moved up and flattened a little here, but it looks like it's rolling over again. And we're in the buy area for corn, but the trend of momentum is going down. Don't usually like to get long something when we have the trend working against us, but I think the crop report on Monday could change this trend. And of course, as I mentioned before, commercials are going to come in and buy around 475. And we're heading back down into that level right now. And that's where I think we could be going in the corn market over the next couple of weeks. Thanks for watching Just Some Guy Trading. Good luck with your trading this week. And don't forget, please like and subscribe to my videos so you know when all of my content comes out.